Welcome to Budget Setup video number 3. In this video, we're going to walk you through setting up your variable expense categories. Having these categories set up correctly will be crucial to your budgeting success. At the end of the video, we'll also show you where to enter miscellaneous expenses that occur on a less than monthly basis. Some good examples of these expenses would be annual car registration fees, an Amazon Prime annual membership, or a one-time kids summer camp fee. Let's get started on the variable expenses. We'll start by navigating to the Income and Expenses tab and clicking the Add Variable Expense button. Please note that as you're setting up your variable expense categories, it is important to be realistic about the dollar amounts you're putting in each category. If you put an unrealistically low amount in a certain category, you will likely end up overspending. That will lead to frustration and in turn could lead to a failed budgeting attempt, and that is exactly what we don't want to happen. Now, the first variable category you'll enter is grocery and necessity. This category is for all of the necessities that your household needs each month. In the expense memo area, it's helpful to make a list of things you consider to be a part of this category and then assign a monthly amount for each item. Common things that go in the grocery and necessity category are groceries, household goods, vehicle gas, kids' clothing, and pet needs. We'll also put a miscellaneous line item to catch any other necessity spending that's not specifically listed here. Next, we'll select your spending control method. For the grocery and necessity category, using a checking account typically works best. You will label the account as grocery and necessity on your online banking and put a grocery and necessity label on the debit card that's attached to it. For a dual-income household, each person will have their own debit card attached to this account. One thing to note is that for any spending category, you also have the option to utilize cash in a labeled cash envelope, or a designated credit card that is labeled for and only used for that specific category. Credit cards do, however, give you the ability to unintentionally overspend in a category, so please use caution if you select that method. Next, you will select your funding schedule. For most people, a twice-monthly schedule works well. Since the spending control method is a checking account, the funding schedule will determine the dates when money is automatically transferred from the main checking account to the grocery and necessity checking account. We're going to set the 1st and the 15th as our 2 dates for our twice-monthly schedule. Next, we have to enter the amount that will transfer to the grocery and necessity account on the 1st and 15th of every month. Since the total monthly amount listed in the memo area is $1,600, the twice-monthly amount we transfer will be half of that, which is $800. If we were using a credit card for this category, $800 would be the anticipated payoff amount on both the 1st and 15th of each month. If we were using cash in a cash envelope system, we'd be pulling $800 out of our main account on both the 1st and 15th of every month. Now that all of the information for the grocery and necessity category has been entered, we'll click the Add button. As you continue to add variable expense categories, keep an eye on your income breakdown on the right side of the screen and how much excess monthly income you have left after you add each category. The next variable expense category we'll add is fun and entertainment. This category is for the daily spending your household does on things that are for enjoyment and are not necessities. In the expense memo, we're going to list eating out, entertainment, and gift giving as the 3 main things this category's money will be spent on, and then assign monthly dollar amounts to each of those things. The spending method will be a checking account, and in a dual-income household, each person will have a labeled debit card attached to this account. We'll choose a twice-monthly funding schedule on the 1st and 15th. The twice-monthly amount will be $100, which is 1/2 of the $200 monthly total for this category. Then we'll click the Add button. The next variable expense category we'll add is personal money. Since we have a dual-income household, each person will have their own personal money category. First, we'll start with Julia. In her expense memo, you can see we've included clothing, hair care, self-care, hobbies, and free spending money. One thing we want to point out here is that Julia only gets her hair done once every 2 months, but when she does, it costs roughly $140. Since we're budgeting for that expense on a monthly basis now, we'll put half of that amount, which is $70, into her personal spending account each month. We'll apply that same principle to Julia's clothing purchases. She typically doesn't buy clothing every month, but we're going to set aside money for it each month anyway, so that it builds up in her account and is available when she does decide to make a clothing purchase. Self-care is for things like massages or getting her nails done. And free spending is just extra money that Julia can spend on anything she wishes. We'll set the spending method as a checking account with a twice-monthly funding schedule of the 1st and 15th. The twice-monthly amount will be $130, which is half of the $260 total in the memo section. Please note that only Julia will have a debit card for this account, since it is her personal spending money. We'll click the Add button, and then repeat this same process to add a personal money category for Julia's husband, Joe. After the personal money, we'll add a category for the big three: medical bills, car repairs, and home repairs. The money in this category will be used to cover any of those expenses when they arise. One month you may have a $400 car repair. The next month your dishwasher may need replacing, or you may have a doctor's visit to pay for. No matter which of these three expenses comes up, the total money that has been set aside here is ready and available to cover it. The spending method for this category will be a savings account, with a twice-monthly funding schedule of the 1st and 15th. The twice-monthly amount will be $225. We'll click the Add button to complete this category. And move on to our next variable expense category, which is travel savings. This category is going to be for any weekend trips that you do, and also for annual vacations that you plan to take. In the expense memo, we're going to set $150 a month for weekend travel and $250 a month for annual vacations. Our spending method for this category will be a savings account. The funding schedule will be twice monthly, with funding dates set to the 1st and 15th. The twice monthly amount will be $200. We'll click the Add button to complete this category, and then add our last variable expense category, which is Christmas and holiday savings. Our example couple determined how much they'd like to spend at Christmas time on gifts, family pictures, and Christmas cards. We took those numbers and divided them by 12 months. Then in the expense memo area, we noted that they would need to set aside $60 a month for gifts, $30 a month for professional family pictures, and $10 a month for Christmas cards. These three things totaled up to $100 a month. Our spending method will be a savings account, and our funding schedule will be twice monthly. The funding dates will be the 1st and 15th, and the twice monthly amount will be $50, which is half of the $100 monthly total from the expense memo area. Once done, we'll click the Add button. Now that we have all of our variable expense categories and amounts established, you'll be able to clearly see your average monthly income and expenses breakdown. Your excess income number shows you how much you should have left over each month to put towards financial goals, like paying off debt. If you're unhappy with that number being too low, you can adjust amounts in your variable categories as long as it's realistic, or find fixed expenses that you can lower or cut out. You also have the option to increase the income side of the equation, possibly by getting a part-time job, but that won't be an immediate thing you can do during this initial budget setup. Lastly, the final thing we need to do on the Income and Expenses tab is enter in your miscellaneous expenses. These are those expenses that happen throughout the year but are on a less than monthly basis. To do this, we'll click on the Add Miscellaneous Expense button. First, we'll enter this couple's car registration fees, which are $500. We'll set the frequency to annually with a payment date of July 1st each year. Then we'll click the Add button. The last miscellaneous expense to add will be some land tax payments that are due throughout the year. The land taxes are $150 each time they are due, and the frequency they are due is quarterly, which is every 3 months. The payment dates are January 1st, April 1st, July 1st, and October 1st. Once we've finished entering those dates, we'll click the Add button. We've now finished adding all of our variable expense categories, as well as our miscellaneous expenses, which means we've completed the initial setup of the Income and Expenses tab. With that tab all set up, there are now a few things you need to do to get those variable categories up and running in real life. Please read through this to-do list carefully and get each item done as quickly as possible. Once you've completed them all, you'll be ready to move on to Budget Setup video number 4. In that video, we're going to move to the Budget Forecast tab, where we'll establish the starting month on your budget forecast calendar. You'll start to see how you're going to be able to view and manage your finances in a way you never thought was possible. We can't wait to get you started on it.